What if I told you the next big wave in financial tech isn't coming from Wall Street, but from your phone? Chime isn't just another neobank. It's a financial revolution disguised as a mobile app. And here's the twist. You can't even buy a stock yet. But what if that changes? Zoom into a futuristic city skyline as numbers and stock graphs flash across the screen. In this video, we're diving deep into a company that could explode the day it hits the public market. Chime could be the Robin Hood of banking, and early believers might see life-changing upside. But this isn't just hype. There's a catch, a risk, a timeline. And no, this isn't another buy Dogecoin because Elon tweeted moment. We're talking real fundamentals, future IPO projections, and what you can do to prepare. Stick around, because by the end of this video, you'll know whether Chime is a sleeping giant or just another overhyped app. Let's face it, traditional banking is broken. Hidden fees, slow transfers, overdraft penalties. It's like they're stuck in the 90s while we're living in 2030. A digital-only bank, built for a generation that doesn't trust brick and mortar. Over 15 million users, no monthly fees, no minimums, instant notifications. Oh, and they make money while saving you money. Remember that time Bank of America charged you $35 for buying a $4 coffee on overdraft? Yeah, Chime's whole business model is based on not doing that. But Chime isn't just some nice-to-have banking app. It's built on a powerful fintech foundation. Their revenue coming from interchange fees. Their users, loyal. Their growth, insane. But here's the catch. Chime isn't public yet. So why should you even care? Because understanding it now could make you a first mover when the IPO hits, and that's where real wealth is built. Let's look under the hood. In 2021, Chime was valued at $25 billion. That's more than Robinhood at the time. Yet, they pulled back from their IPO plans. Why? Was it because they were too successful? Nope. The market got cold. Inflation soared. Valuations dropped like NFT prices in 2022. But now, things are heating up again. Interest in fintech is rising. Gen Z is embracing mobile-first everything. And guess what? Chime has been quietly preparing. They've invested heavily in infrastructure. They're launching credit builder products, and they're expanding partnerships with Visa, Green Dot, and even payroll companies. This isn't just a checking account anymore. It's an ecosystem designed to capture financial activity from your first paycheck to your mortgage. But there's risk. If Chime can't differentiate fast enough, if big banks catch up with better tech, if the IPO gets delayed again, you could be left holding the bag. So how do we protect ourselves and still position for upside? Let's get tactical. You can buy Chime stock today, but there are 3 things you can do right now to get ahead of the crowd. 1, pre-IPO access via private markets platforms like EquityZen and Forge offer access to late-stage startup shares. Minimums are high, but knowledge is power. Track the volume. Watch for insider moves. 2nd, track their IPO filing closely. When Chime files an S1 with the SEC, it's go time. Bookmark it. Study it. That's your playbook. 3, invest in adjacent plays Visa and Green Dot. Benefit from Chime's success today. So even if Chime isn't on Robinhood yet, the ripple effects are. And if you think waiting is safer, just ask the folks who almost bought Amazon in 1997, but thought it's too risky. The people who build wealth don't wait for perfect timing. They prepare, they study, and when the window opens, they act. So when Chime does ring that IPO bell, will you be ready? If you're serious about turning knowledge into wealth, this is just the beginning. Because while Chime is disrupting banking, Oracle is silently powering the AI arms race. You want long-term upside? You need to understand what's happening behind the scenes. Tap on the end screen right now to watch our full breakdown of Oracle Stock Analysis 2025. It's not hype, it's insight. The kind that helps you build the life you actually want. Remember, you don't need to be rich to start investing, but you do need to start investing to get rich. See you in the next video.